hello and welcome to this edition of the Startup Central. I'm Nayantara Rai, working from home. This is the only show of its kind on Indian television dedicated, of course, to startups, innovation, technology, disruption, entrepreneurship. If it falls under the gambit of the new economy, it's here every weekday at 6 p.m. on your favorite channel, ET Now. Ladies and gentlemen, like all the stakeholders we feature on the show, Team Startup Central thrives on constructive criticism. We want to hear from you. Keep writing into us. Tell us how we can improve the show. Our email address is right on top, suc@etnow.tv. The big news coming in for the startup universe today is how a parliamentary panel has recommended that long-term capital gains tax should be scrapped when it comes to startups. The idea being to give a helping hand to entrepreneurs, startups, and encourage all of them. Remember, this is a recommendation. It's not incumbent upon Parliament to actually accept it. It's not incumbent on the government to even introduce this as a legislation. But why is it so significant? What can it actually do for the startup universe? Is this what founders need? Is this what investors need? I'm going to be discussing that and a lot more with my two guests who are now joining me right here. Sanjay Swami, Managing Partner at Prime Ventures. I've also got with me Karan Mola, Partners at Chirate. Thanks, guys, for being a part of Startup Central. Sanjay, I'm going to come to you first. Must be music to your ears if a long-term capital gains tax does get scrapped when it comes to startups. I want you to explain to our viewers that this recommendation, why is it significant and how can it actually bolster the ecosystem?
Hi, Nayantara. Great to be on the show. I have to confess that this is something that's a new hot of the press topic, and often the devil is in the details. But having said that, I think entrepreneurship, while financial success is often an outcome of several years of hard work and a lot of painstaking company building, entrepreneurship really provides a means for creating a lot of value, a lot of employment as the primary benefits for it, and helping transform societies through some unique use of technology that solves problems that have never been solved. And a lot of effort goes into creating these companies. Just today we announced an investment in healthcare monitoring. These are all companies that take several years of research and technology before they can actually see the light of day and see any monetization. So there is a lot of risk capital that goes into investing and creating companies here, and I think we need to encourage this to the to the extent possible, and that takes sort of a joint venture type of a mindset between not just the entrepreneurs but also the investor ecosystem and the customer ecosystem, right? So I think creating an environment that is friendly to all is very, very important. And long-term capital gains, which is basically this is post-tax money that's being invested back into the ecosystem. If we are going to charge heavy taxes on successes, that makes it that much less attractive for investors to put money into this opportunity, given that typically startup investments are generally illiquid for several years, right? Unlike public markets, right? So that's why I think this is a move in the right direction. It's something that will, jumpstart innovation, jumpstart employment, and jumpstart creativity in the market. I think it would be great if this is passed, and I sincerely hope that it's going to happen.
Karan Mola, let me come to you now. See, nobody likes to pay taxes. That's a fact, and it's not just in India, it's around the world. You can keep lowering taxes, everybody will want lower taxes. But coming specifically to startups, and and COVID-19, of course, has been a really difficult time. Startups have had to reimagine it all, increase their cash runway. We've seen instances of so many startups having no choice but to fold up, wind up, all of that. How will scrapping the long-term capital gains tax give a booster shot to this ecosystem?
Sure. No, I think that's a great question, and I think it's important to just take a step back. And obviously, this is a recommendation. We'll have to see if it gets cleared or not. And I think if I saw
Yeah.
it's to be done away for 2 years, and then they'll maybe levy some other tax to sort of equalize it with listed equities. But I think that's a great first step. But I think the bigger point is there is a differential in treating long-term taxes on unlisted equities versus listed equities. So I think that's one equalization that kind of happens with this, and that goes along in tandem with the long-term nature of the asset, like Sanjay alluded to. Most of the investments that all of us do are typically between 5 and 10 years or so, and the risk capital that goes there is generally a lot more risky compared to what you're putting in listed equities. So to have that differential makes it creates an unlevel playing field. And a lot of us also raise capital from India, from domestic sources, both institutions as well as family offices, etc. And for them, that's always been a big question. That look, everybody wants to participate in the ecosystem and wants to be able to contribute, but if there is a uneven playing field with regards to tax, that does come back, and that's always something which is at the back of people's minds. So this goes a long way in doing so. The second part of it is, as we've actually seen through the last 5-6 months in COVID, the startups have become a lot more mainstream. So a lot of them, as you said, have gone through tough periods, but also the effect that they've had on the economy, whether it's creating sustainable employment, whether it's creating solutions to deal with things like ventilators, etc.
Yeah.
All of that's had a benefit, right? So you can't just take the benefit of that and then continue with the tax tariff as it was. So I think this really goes a long way. And I think the other couple of things that the parliamentary panel also suggests was, SIDBI has played a great role in facilitating, being the fund of funds for a lot of fund houses, including us. And so can they play that role a lot more wider, right? So that you have a multiplier effect of capital in the system. And ultimately, domestic capital has to play that role. It's played that on the stock market. It has to play that role in unlisted equities as well. And that's really what's driven the growth in any large country which has got a vibrant ecosystem. So I think those are maybe the 3-4 forces that play, which make this a fairly significant, important development.
Absolutely. And, we have seen SIDBI trying to play a larger role. You've got India's largest state, the size of some countries as well. Uttar Pradesh, for example, which is setting up a fund. And SIDBI is, of course, got the mandate for the fund of fund for Uttar Pradesh and their startup policy. But Sanjay Swami, everybody only talks about the success stories. For every one success, there are probably 7 to 8 near-death instances which take place. So even if and the idea is people like you, Karan from Charate, have to find those success stories, right? So where does long-term capital gains fit into all of that? Because we don't talk about the failures. We don't talk about the investments that go bad.
Yeah, absolutely. I think broadly, if you see the venture capital ecosystem and the startup ecosystem in general, you're lucky if 3 out of 10 companies do, outstandingly well, right? And that's how the Pareto kind of shapes up over time. And that's why, I think having these incentives are very important, because we are all in the business of risk taking. Yes, certainly, people, as you say, look at the successes and look at, the kind of outcomes and financial success that comes out of them. And obviously, we all like to celebrate that because it inspires others to get into the space, etc. But really, there's a lot of hard work that goes in, and generally, I think the other 7 out of 10 probably end up taking more of our time because we try our best to help the entrepreneurs and work alongside them. So I think this is a business that is heavily glamorized when you look at it from the outside, but it's an incredible amount of hard work that goes into it. Sure, the outcomes and the financial success that comes with it over a period of time are to be celebrated. But I think one must acknowledge that there is a lot of employment and fundamental work that gets done, which the startup ecosystem does, and we would love to see more capital coming into this ecosystem, because there is never enough, right? There are more problems to solve for India, and startups work alongside and solve problems that are really an extension of what government and
Right.
other ecosystems to solve. Yeah.
Karan Mola, you raised such an important point as well, which Sanjay was just touching upon, which is that you need a robust domestic capital ecosystem. This is a theme that everybody is building upon, and especially when you look at the geopolitical tensions, when you've pretty much also made it clear that investments, whether it's by an Alibaba or a Tencent, for example, are not welcome at the moment. Will this recommendation, if it goes through, do you think go a long way in funds like yours, maybe attract HNIs to become LPs, to get them to invest in the startup ecosystem?
I think without doubt, I think that's the single one of the single largest benefits of something like this. Look, at the end of the day, you have to think of it this way, right? Long-term capital in a long-term asset, which is clearly risky and somewhat illiquid. If it's coming only from outside of the country, it's up to the whims and fancies of what's happening in that host country or those host countries, right? And in a situation like what we find ourselves in today, there will always be long-term committed capital that will continue to be in India, but there will be shifts. But those who are in India will have to invest in India, right? And will continue to need to do so. And I think that underscores the importance of having a vibrant domestic funding ecosystem. And it goes right all the way from seed capital, the first check someone writes, all the way to growth capital. And I think while some pockets of that ecosystem have developed more so than others, this will give the right, or this will probably be one of the first steps to encourage development of capital in other areas, whether it's growth capital or late stage capital. We generally relied on capital from outside of India, but this is a great way to get more participation from domestic, whether it's HNIs, as you said, or family offices, or institutions who've not necessarily gone there. So I think that entire push can be started with something like this, and ultimately it matches longer term vision of founders and investors with the longer term nature of the capital, and the tax kind of then is the third leg, right? So they're all kind of in sync with each other. And that's really what you need to be able to create a longer term result for entrepreneurs, as Sanjay said, right, for the right kind of exits. So hopefully this is the first step, and there are a few other things which are hopefully in the works, which will get done.
Okay, I'm running out of time, so I'm going to make this my final question. I'll give it to you, Karan. You're seeing these recommendations being made at a time when there is a proposal, a draft proposal, albeit for overseas listing. It may make dual listing mandatory in India. So how should one see all of these developments coming together for the startup ecosystem? You're both my guests today are talking about creating a level playing field between listed and unlisted equities. But with all that action which is taking place at NASDAQ, which our founders want a piece of, how are you supposed to look at that, plus this call for long-term capital gains tax together?
So that was one of the other things that I alluded to in my previous point. Absolutely, right. I think there are a few steps which are still required to create the right kind of rules and compliance in place for the overseas listing. Such as, do you need to have a dual listing, or do you need to have a secondary listing in India? But I'm sure those things will get ironed out. These things take time, but that will definitely create a lot more liquidity for a lot of the assets which are looking to go public, in the next 2 or 3 or 4 years. And really create that path for companies to be able to follow going forward. So I think that's probably the second biggest thing which will unlock a lot of value.
Yeah. And just to quickly add, I think overseas markets are much more tuned to startups going public, even when they're not necessarily profit making. I think the combination would be very powerful for the ecosystem.
My producer is saying I have another 30 seconds. So Sanjay Swami, I'll give you this one before we quickly wrap up. I know you do all your due diligence, you take calculated risks, all of that. But just to understand, if this proposal of long-term capital gains tax does go through and it's scrapped, will you take more risks? Will we see investors making more investments?
So I think investors, that's the work we are in, that's the business we are in. I don't think the tax gains will define whether we invest or not. But I think the source of capital for investors, right, and for private investors to come directly in as angels and things like that, that is what is going to increase. So the supply of capital and more importantly, supply of domestic capital will increase, and that will make it that much easier for all of us in this ecosystem, including most importantly, the entrepreneurs.
Right. I think one thing we've learned since COVID-19 also is that the color of money matters, doesn't it? Thanks, guys, for joining us on this edition of Startup
Thank you.
Central. Really appreciate it. That's a game-changing recommendation. It is just a recommendation, and I like to caveat that. We don't know if it's going to be accepted by Parliament, whether the government will even table it at the legislature, but it's an important one, albeit Parliamentary Standing Committee recommending scrapping of long-term capital gains tax for 2 years, create a level playing field between listed equities and unlisted equities.